Back again.
Continuing to explore this complex world of global finance.
With India's journey in the spotlight.
Yeah.
Picking up from where we left off,
Okay.
that whole financial inclusion idea really got me thinking.
Oh, yeah.
Yeah, it's great that 80% of Indians have access to banking now.
It is.
But what does that actually look like in practice?
Right.
Are people actually benefiting?
Yeah, that's a great question.
Access is just the first step.
Mm-hmm.
What really matters is how people are using those services
Right.
and what the tangible impact is on their lives.
Yeah. Are they actually using these services? And how is it changing things for individuals and families and businesses?
Exactly.
Well, the interviewee shed some light on this.
Okay, how so?
They talk about strategies for strengthening financial inclusion globally,
Okay.
with a particular focus on reaching those who are still excluded.
So those outside the formal financial system?
Exactly, especially in developing regions. And they suggest some pretty innovative approaches.
Like what?
Well, like partnering with mobile money providers
Okay.
and local financial institutions.
To reach those in more remote areas where traditional banking might be difficult.
Exactly, is using technology to kind of bridge the gap,
Makes sense.
make those financial services more accessible.
Yeah, exactly. And they highlight India's Aadhaar system as a really good example.
Oh, yeah, Aadhaar.
It's that biometric digital ID system, right?
Right, and it's been a huge help in reducing barriers to opening bank accounts and accessing credit.
I can see how that would be a game changer, especially for folks who might not have traditional forms of ID.
Absolutely. It's about empowering people
Yeah.
and giving them the tools they need to actually participate in the formal economy.
This potential World Bank senior official also mentioned microloan programs and digital wallets
Yeah.
and how helpful those have been for women and small businesses.
Oh, yeah. Those can be super powerful for stimulating economic activity.
At that grassroots level.
Yeah, exactly. Imagine a woman in a rural village being able to access a small loan to start her own business.
Yeah.
Or a farmer who can get payments straight into their digital wallet.
It really does open up a world of possibilities.
It gives people a chance to build their own futures.
Exactly. And financial literacy is a big piece of the puzzle, too.
Oh, absolutely.
The interviewee emphasized that, right? The importance of giving people the knowledge and the skills to manage their finances well.
Yeah, because if people understand how to save, budget, invest wisely,
Yeah.
they're more likely to make those sound financial decisions.
Exactly. It empowers them to really take control of their financial well-being.
Right. Which is key for a thriving economy.
It seems like financial inclusion is such a multifaceted challenge.
It is. There are no easy solutions.
But it sounds like this interview provides some valuable insights
It does.
and potential solutions.
Yeah, these strategies could actually help make financial services more inclusive and more accessible
Worldwide.
worldwide, and that's something we're striving for.
Okay, let's switch gears for a bit.
Right.
Go back to that IMF World Bank report for a second.
Okay.
I was really interested in the parts about those non-performing assets.
NPAs?
NPAs, yeah, and India's efforts to deal with them.
Mm-hmm.
It seems like this has been a process for them for a while.
Oh, yeah. It's been ongoing. The report actually outlines all the RBI's actions.
Starting when?
Well, they introduced a comprehensive risk-based supervision framework back in 2013,
Okay.
which was a major step towards strengthening oversight of that banking sector.
Right, and then they did that asset quality review,
The AQR.
the AQR, in 2015.
That was huge.
Yeah, it was a pretty big deal.
It was meant to get a really clear and accurate picture of just how bad those NPAs were.
In the whole system.
Yeah, and what it revealed was that the issue was even more significant than they initially thought.
Oh, so it was worse than they realized.
Yeah, there was a lot of underreporting and misclassification of loans going on.
So a bit of a reality check for the banking sector.
You could say that. It highlighted the need for greater transparency and stricter enforcement of those rules regarding loan classification and provisioning.
So stricter rules, basically.
Yeah, and they had to respond.
And how did the RBI respond to that?
Well, they took action, decisive action.
Okay.
They tightened up regulations, they withdrew regulatory forbearance, and introduced stricter provisioning requirements.
So they closed all those loopholes that let banks kind of downplay the problem.
Exactly. They're trying to create a more accurate representation of the bank's financial health.
So encouraging them to be more proactive about dealing with those NPAs.
Exactly.
Not just sweeping it under the rug anymore.
No. And they also started moving towards a more robust bankruptcy regime.
Which is crucial for resolving those NPAs efficiently and fairly.
Exactly.
So it sounds like India is making progress.
They are.
But it's an ongoing battle.
Oh, for sure. But the report acknowledges that the RBI's efforts are starting to make a positive impact.
Okay, well, that's good news.
It is encouraging.
Another thing that caught my eye in the report was the section on concentration risk.
Oh, yeah. What about it?
What's the story there?
Well, India has been working on aligning its framework for managing large exposures
Okay.
with those international standards set by the Basel Committee.
Okay.
And they actually introduced a new large exposures framework.
The LE framework.
Yes, back in 2016.
Okay. But weren't there some delays in getting that fully implemented?
There were. Yeah,
Oh.
it wasn't fully operational until 2019.
Okay.
And the report notes that certain exceptions and transitional arrangements were in place during that time.
Like what?
Well, for example, some infrastructure project loans were allowed to kind of exceed the exposure limits.
Of the new framework.
Yeah,
I can see how that might be necessary in certain cases.
Right.
Especially when it comes to supporting things like infrastructure.
it's a balancing act.
Yeah.
You want those strict limits to prevent that excessive concentration risk.
But you also need some flexibility to actually support economic development.
Exactly.
So the report recommends that the RBI closely monitors the banks and gradually phases out those exceptions as the new framework takes hold.
Right. It's about finding that sweet spot between prudence and pragmatism.
It seems like that's a recurring theme in this whole deep dive, actually.
How so?
Balancing those competing priorities. Yeah.
Right.
Whether it's financial inclusion versus regulations or supporting growth while managing risks.
Yeah, you've hit the nail on the head.
I'm definitely starting to appreciate those complexities more.
Me too. And we've only just started to
Wow.
explore the depths of this topic.
There's so much more to uncover.
There is corporate governance, operational risk,
Mm-hmm.
and even the potential for misuse of these financial services.
Right, and we're going to delve into all of that in the final part of this deep dive. Okay, so here we are
Back for the final part,
of our deep dive into global finance.
focusing on India and the World Bank, of course.
Right, we've covered so much ground already.
We have financial inclusion, those non-performing assets.
Even some clever solutions like those green debt swaps.
Right.
We've seen the progress India is making, but also all the challenges they're facing.
In building a strong and stable financial system.
Exactly. So now let's zoom in on corporate governance,
Okay.
which is so vital for ensuring the integrity and stability of those financial institutions.
Absolutely. The IMF World Bank report really emphasized this.
It did. So what are the key elements of good corporate governance? What should we be looking for?
Well, the report highlights a few things.
Okay, like what?
Well, first, clear roles and responsibilities within a bank.
So everyone knows who's accountable for what.
Exactly.
Makes sense.
Then there's effective oversight from the board of directors.
Okay.
They need to be actively engaged, asking those tough questions,
Right.
holding the management accountable.
Yeah, that's important.
And of course, robust risk management systems are essential too.
To identify and mitigate all those potential threats before they become real problems.
Exactly. It's like having a system of checks and balances
To keep everything running smoothly.
and prevent any funny business.
Exactly. But the report raises concerns about the governance of those public sector banks in India.
It does.
So what are the concerns there?
Well, it seems like the RBI's authority over these banks is a bit limited.
How so?
Well, for example, even if the RBI sees a need to intervene,
Yeah.
they face challenges in removing directors or even forcing mergers in those public sector banks.
That does sound like a potential conflict of interest.
Yeah, I mean, if the
Oh.
RDI can't exercise its full authority,
Right.
how can it ensure a level playing field for all the banks?
That's a great point. So what does the report recommend
They recommend strengthening the RBI's powers.
to address this issue?
Yeah, because ensuring that all banks are held to the same standards of governance,
Right.
regardless of whether they're public or private.
It's essential for a healthy system.
It is. It's about fairness and accountability across the board.
Okay. Let's shift gears a bit.
All right.
Let's talk about something that's often overlooked.
What's that?
Operational risk.
Ah, yes.
It's a big one for financial institutions, even if it doesn't always make headlines.
It doesn't. The report touches on this too.
So what exactly is operational risk?
Think of it as anything that can disrupt a bank's operations
Okay.
and lead to financial losses.
Like what kind of things?
Well, it could be internal fraud
Oh, wow.
or a major cyber attack,
Okay.
a natural disaster,
Wow.
even just a system failure.
So many things.
These risks are diverse and unpredictable.
It's like having a plan for the unexpected.
Yeah, those what-if scenarios.
Exactly. So is India prepared for those scenarios?
Well, the report actually commends the RBI for taking operational risk management seriously.
Good.
They've issued guidelines, and they conduct regular inspections to make sure banks are complying.
Okay, so they're on top of it.
They are. but there's always room for improvement.
Of course. So what could they do better?
Well, the report recommends enhancing their data collection and analysis capabilities.
To better identify those emerging operational risks. Exactly. It's all about staying ahead of the curve and proactively adapting to a rapidly changing world.
Makes sense.
Especially in the world we live in now.
Right. It's complex, interconnected.
And those risks are always changing.
One final issue I wanted to touch on.
Yeah, with that.
The potential for abuse of these financial services.
Yeah, a global concern.
Definitely something that potential World Bank senior official highlighted
Right.
when they were talking about technology. They see a lot of potential in blockchain
Oh, yeah, for sure.
for increasing transparency and minimizing corruption.
Especially with those fund transfers.
Exactly. It's about making sure that money is being used for what it's intended for.
Absolutely. Transparency and accountability are key.
For building trust.
And making sure those funds are used effectively.
And the report dives into India's efforts on that front.
It does. It assesses India's compliance with those international standards.
For anti-money laundering and combating the financing of terrorism.
Yeah.
And what are their findings? Is India doing enough? Well, the report acknowledges that they've made good progress.
Okay, good.
But they also point out some gaps that need to be addressed.
Okay, like what?
Well, for example, they recommend strengthening the requirements related to politically exposed persons.
Those who hold those prominent public positions?
Right, who might be more susceptible to corruption.
It's like an extra layer of scrutiny to mitigate the risk.
Exactly.
Makes sense.
And they also emphasize the importance of having really robust customer due diligence procedures.
The banks really need to know their customers.
Yeah, and make sure that their transactions are legitimate.
Connecting the dots.
And making sure everything adds up.
Exactly.
I want to circle back to something we discussed earlier.
Okay.
The importance of measuring impact.
Right.
We talked about how the World Bank needs to look beyond just those economic indicators.
Yeah, when they're assessing how effective their initiatives actually are.
Exactly. And consider that broader social and environmental impact as well.
Absolutely. It applies to everything we've talked about.
It does. Financial inclusion, corporate governance, risk management.
We need ways to know if our efforts are truly making a difference.
It's about holding ourselves accountable.
And making sure we're actually delivering real results.
Exactly. It means developing robust frameworks and methodologies for that impact assessment.
Not just looking at numbers.
Right, but actually gathering qualitative data.
To really understand the real-world effects of our actions, it's about painting that complete picture of the impact.
Both the tangible and the intangible.
So as we wrap up this deep dive,
Yeah.
What are some key takeaways for our listeners?
I think the biggest one is just how interconnected everything is.
Global finance, development, individual well-being.
It's all woven together.
And it's a tapestry that's constantly evolving.
It is, with new challenges and opportunities popping up all the time.
Exactly. So it's important to stay informed,
Yeah.
engage in these deep dives,
Ask questions.
and challenge our assumptions.
Because learning is a continuous journey.
It is. This deep dive has given you a glimpse into the intricate world of global finance, India's unique position, and the role of the World Bank.
That's right.
Now it's up to you to connect the dots, draw your own conclusions.
Think about how these insights might inform your own perspectives and actions.
Keep exploring, keep questioning.
Keep diving deep.
That's the beauty of it. Until next time, happy diving.